Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, guys. Well, we got jobless claims here in about 3 minutes. I'm a little bit behind. I don't know why. I've been doing that a lot lately. I gotta figure that one out, huh? Well, but really quick here, it looks like we have seen a decline in the S&P 500 overnight, coming back here a little bit, and the treasuries about where they were, but we had to have pretty good downturn yesterday because of that PMI news. So we'll just look over other things. Oil not up as big as maybe I would have thought. Still below 90. Gold and silver, they're actually been hanging on to their most recent gains, so that's cool. And the dollar, what are we doing? Bitcoin just kind of middling around the dollar, up at 111. So not as high as they were yesterday, but still dollar being quite persistent here. And the news, or the economic numbers we should say, in about a minute here. U.S. initial jobless claims, we're looking for a reading of 204K versus a previous reading of 193K last week. So that's where we're at. This is probably a too volatile to trade type of event. And let me tell you what, man, tomorrow that non-farms is going to be wild. It's going to be wild. So let's just kind of chill here, see what they do. All right. And it should also be noted that we have a pretty long slate of central bank speakers slotted to speak today. We've got Fed's Mester speaking just before the top of the hour. We've got Kashkari speaking after that. And then later in the day, at around 1 o'clock Eastern time, we've got Cook, Kashkari, Evans, and Haskell all speaking, apparently. So might have some volatility because of that. I can see pretty decent bull in the treasuries. Not crazy, but pretty decent bull. This is just jobless claims. It could be too volatile to trade, but I don't expect it to be like hugely off of the estimate. They're usually pretty good with this number. But look at that. Micros are like, you can't trade me. Okay. I'm not getting the number yet. Okay, 219K. So higher than expected. Not bad. That's a good little move up there. Yeah. I don't know, based on that news, like, if that's really something that I want to like jump on and I'll see it continue and stuff. I think this kind of makes the non-farms tomorrow tough, man. Because I'm getting a lot of conflicting signals. We'll see what like the analysts come out with. This is a situation where you're gonna have to do all the math, I think. But yeah, you can see there this is like a good initial move up, but it's kind of middling. The micros there kind of saying, nah, Seth, you can't trade this. Though if I wanted to go short that guy at 3.758, it looks like good to take out. You think you'll see a seller in the indexes? Well, I'm wondering, I didn't really see anything in my reading overnight to explain why the S&P 500 fell down here. It's not too huge of a move. So it could just be like mean reversion rebalancing. Okay, see, look, somebody took the guy at 3.758. You'd be in the money. Not super great, but you know, if you could get somebody to fill you on the other side, you'd make $10. I think for me, probably better to wait for the liquidity rebalance. We are kind of coming up into some, like, a key level above us at 19 or so. Also, that might be a little tough. If I was trading the 10-year, I could probably do something. You might just hold this the whole day. So let's think this through, okay? What are some predictors of order flow that we have for today that tell us that the treasuries are going to move up all day? Well, we got U.S. initial jobless claims. It was 219K versus a previous reading of 204K. So it was about 15,000 more initial jobless claims than anticipated. That's about average noise over there, would say. Let's see here. If we come to unemployment claims and like we look at the number right here. Modest miss, right? Should we call it a miss? Beat. It's kind of funny because some numbers it's like it's good when it's above, and some numbers it's good when it's below, and then, you know, it depends on the macro environment too and everything. But like this is not like an unusual discrepancy in jobless claims. That's all I'm saying, right? Pretty much in line. Okay. It is a Thursday. So Thursday you'll tend to get okay flows. I don't have any kind of like geopolitical news or anything like that driving us today, other than we're going off of like what happened yesterday, right? So yesterday there was some big trades in the S&P 500, apparently some argument over whether that's what pushed us up or not, but they recovered it and they pulled out a bull day yesterday. Maybe that comes back. That's basically all I got. That's basically all I got. One flow that we might want to keep an eye out for is that UK bearishness that always seems to come in after the top of the hour, right? Okay, so, and then what's next? What are our things that we look at for trade, right? So we understand our predictors of order flow. Next thing that we're going to want to look at is the current liquidity conditions. So market is pretty thin. Micro's over here giving us like 4 ticks on the other side. We did have a pop. They fell back into the hole and are roughly where they started, although this might be an okay place to look for continuation, to be honest with you. Correlations. I am seeing a jump in the 6J. Nothing too crazy, but I am seeing a jump in the 6J. Not really seeing anything in gold. So gold isn't really confirming. Spreads. We are maybe steepening, which would make sense if we're going to the upside. The volume was mostly in the 5-year though, right? Volume was mostly in the 5-year. And next thing is like a volatility. So if we come, volatility is one that you just kind of always have in your mind. But like if I come over here, like look at this market here, in the ES on a daily basis. Right? Like we had 2 big up days and now 2 days of like it going hardly anywhere. All right. Let's come back to ZN. Well, we've had a lot of days that were like big days and we've had a couple of days that were like dojis. Okay. But So maybe some volatility. Okay. So, and then our risk management, 16.5 here within the range. So depending on the price that you got. So what's my read after all of that? Well, I don't have anything in the predictors of order flow that tells me that we're going to move up or that we're going to move down. So for me, at the moment, no trade. But let's just say that we did have something that we felt convinced us very strongly to the long side. Is that going to be a trade that we hold for all day? Given the current liquidity conditions and everything else, that might be a little bit difficult, right? Because even if we do trend up, you're going to get pretty steep pullbacks like we just had, right? So I'm not saying the trade is bad or anything like that. I'm just kind of looking at my own analysis of the market, and I don't see the case for try and hold it all day. But we'll see. We'll see. Maybe there's something going on. Maybe there's something going on that's going to push us up. Looks like the S&P 500 did like that news that we got, though. So there's that. And dollar is coming down here. The dollar is coming down. So like I can see based on that news, probably along. It's just that if I get a breakout here at 20, maybe I jump on. But as soon as I see signs of liquidity holes forming, and which is probably pretty likely to occur up here around 25, 26, I think I would be taking profits. Come back over here. But like I said, again, one order flow that we don't, well, we don't know if it's going to be there today, but it has been there every other day this week, is selling in the gilts starting at around 9:05 Eastern time or so, right? That'll come up in about 20 minutes. So gotta be a little bit wary of that. And then the larger thing is that because non-farms is such a big deal tomorrow, we might not be seeing a whole lot of activity today. We might be kind of more in the kind of action where the market makers are a little bit more dominant. Although I think for the market makers to really get that and to start kind of pulling tricks on people, we're going to need a little bit more liquidity. Because it'd be too easy for the market orders to push us around. Yeah. I'm wondering if in our little strategy PDF that we're making, if instead of calling it, oh, you need order flow, if we should just call it like reading current liquidity or something. I'm just like thinking like maybe you don't call it order flow to kind of differentiate yourself from people that are basically teaching the technical analysis of order flow. You know what I mean? What's this? Carl Quintilla quoting Goldman, we see easier comps as the industry resumes more normalized growth dynamics. Also, the console cycle finally seeing a catch-up trade in 2023 in terms of units as global chip and supply logistic headwinds begin to abate. As Goldman ups Take-Two Interactive to buy with a target at 165. Now that's interesting to me. So you know what would be an interesting stock to look at? Let's pull it up here. Let's pull up our trading view to look at a stock here. I don't know what their symbol is. Let's see if I can find it. Because I was watching the Cyberpunk Edge Runner show on Netflix. And it kind of seems like that CD Projekt Red, yeah, there it is, CDR, that, you know, after getting hammered, okay, yeah, like they got hammered. Look at this, man. They were up in the 400s? Are you kidding me? Wow. But hey, maybe now is a good time to pick them up now. Where's the best place to learn proper DOM reading? Here is, I have a whole, have you not watched my order flow playlist? Here's the thing. Maybe that I should say in those videos. Oh, Matthew's laughing. The order flow reading isn't as it's not as sophisticated and mysterious as we make it out to be, I think. So you go through it. I'll show you all of the different things that you're gonna see on the book, and then I will walk through the stuff that we know empirically that we're looking for on the order book. Right? I think that everybody, again, just think about this. I need to come up with a better messaging for this. Help me out here, guys. Your brain wants to do technical analysis. It wants to do technical analysis. It wants to come in and say, oh, when I see a big number here and a small number here, that means that I should go long. That's how the human brain works, right? It evolved to go, oh, okay, here is a track in the ground. It is a deer. It is pointed that direction. Ergo, I will go that direction and I will find the deer to kill. That's what we evolved. That's like our unique adaptation in the animal world that makes us special. Is we look at we're looking for like correlations and things, and we try to use that data to predict the future. Problem. Market is statistically efficient. Market is statistically efficient. Man, we came back up there pretty quick. Market is statistically efficient. So any kind of signal that was that simple and was kind of in line with the way that the human brain works, already taken out of the market, right? So if there is a pattern that exists, my voice cracking here. If there is a pattern that exists, it's going to be difficult to find. And it's probably going to be complicated, and it's probably going to be like counterintuitive to some extent. So like this whole thing about liquidity holes, I think that's a really, really good example. So what does the liquidity hole tell us about the market? If I were to sum it up in as few of words as possible, I would put it this way. Supply and demand tends to rest at, price tends to rest where supply and demand are at their minimum. Do you get what I mean? So the place where nobody wants to put buy liquidity up, nobody wants to put sell liquidity up, that's where price tends to go to, right? This is counterintuitive. All of the people that sit here and look at the market and they read this, and especially they're watching volume profile, and they'll see, look, these volume profile things, they form and there's like a area where a ton of volume traded. That must mean that like there's a lot of supply and demand there, that traders are really interested in trading that spot. Well, that doesn't make sense. Doesn't make sense. If supply and demand are equal, if the price is fair, why would you want to trade at it? I don't know about you. I don't want to trade at a fair price. I want to trade at a price where I have an advantage, right? So it's counterintuitive. But what does the math tell us? That price tends to rest where supply and demand are at their minimum. And the reason that we get the spike in the volume profile is that price ends up staying in that location for so long that it ends up becoming that volume distribution that you see. And this is what causes these volume distributions, which are not, which is different from what you would expect if price was just a random walk, right? And this is one of the pieces of information that we're kind of taking advantage of, right? So yeah, there's a pattern, I guess, to the market, but it's completely different from how the technical analysis person thinks about it, right? It's counterintuitive. It's not what the people that are just looking at this would think it would be. It doesn't necessarily predict direction so much as a location where we might come to rest. And it has absolutely nothing to do with the psychology of people. It's all caused by the structure of the market. So that's another one I got to say, is that from all of my observations, trying to use like people's psychology and the patterns that people should fall into, not very effective, especially not on short time frames. Why? Because on short time frames, people are actually quite random. People are actually quite random. They're not as logical or predictable as we want to believe that they are. They're hard to predict. So the actual statistical inefficiencies or things different from a random walk, because when I say inefficiency, it kind of makes it sound like, oh, that's something that you can take advantage of and make money off of, but stylized behaviors of markets tend to be based more on the structure of the market, and those are better places to look for an edge. Okay, David, good morning. What's the difference between the tape, level 2, DOM, and time and cells? Do all of them provide the same info? Okay, so level 2 is kind of an interesting term because level 2, it generally is read to mean market depth. Okay. Now, I think the reason that the term level 2 become prominent is because when you're looking at market depth data for stocks in most platforms, you're looking at the level 2. But what is actually level 2 to them? Level 2 to them is like, who are the major brokers and what prices are they offering and stuff, right? The major prime brokers, rather. So I don't like to use the term level 2. I like to use the term depth of market. You want full depth of market. Depth of market is you can see the limit orders at every price. That's depth of market, right? Now, tape is a super generic term that could mean a lot of different things. But the origin of the term tape was back in like the 1920s. You would have like a little telegraph machine that would use a wire to print stuff, and it would print out what the prices were. My understanding is that it would show you like the price and like how much traded, and then the price and how much traded. So a classic tape is probably more like this summary tape that you can get in Jigsaw, where it kind of comes in and it says, okay, we ticked up to this price. Here's how many orders it took. Okay, we ticked down from 16 with 626 orders, right? That's what I think of as a tape. But generally speaking, I would just kind of think of the tape as just like not a useful term, right? That people use the term tape for different marketing reasons because it appeals to a certain group of people. Kind of lame to think of it that way, but I really think that that's what it is. Like, man, the liquidity is really bad this morning. We're still 500s, and we're just trading back and forth across this whole range. Okay. So I would like to use the term DOM. What is the DOM? It's the depth of market. Time and cells. What is time and cells? So this is an even more interesting technical subject, because the time and cells, basically what you get in your trading platform is you will get market depth updates, and you will get market order updates. The market order updates are given to you in terms of matching limit orders. So if we traded 626 here at 16 to trade down, you will get, a couple hundred orders that got filled here, because there will be all of the limit orders that got filled, right? So what you see on like the data that you get just from the exchange, not too useful, because what you really want to see is who the aggressor was, right? Like if some market order came in and just sold into all of that. So that's why Jigsaw has the reconstructed tape. So reconstructed tape is what most people think that a time and sales would be, right? So do they all provide the same info? No. But really, getting back to reading order flow, and how do you read order flow without turning it into technical analysis? Well, here's how. We want to look at what the market depth is. So we're going to be particularly attention to what is the best bid, best offer, and how much is being placed in there, right? When market orders come in, I'm going to look at what the best bid, best offer is to determine if those market orders were buys or sells. Okay. And that's where we get cumulative delta. And cumulative delta is the best indicator we have of informed trading. If we are seeing strong autocorrelated order flow that is visible within the cumulative delta, that is very indicative of a large meta order or an informed trader. Yeah. So that's one thing that we can look at. And then we can also look at what the depth of market is at an individual price compared to how much is trading there, and watching that change over time to try and judge what the latent liquidity is, because we can see the resting liquidity, but that's not really what the liquidity is, because it'll trade and then they'll add more, and it'll trade and they add more, because the liquidity providers kind of have an incentive to not show everything, right? So that's essentially what we're trying to do in order to try and judge what the current liquidity conditions are. So what are the current liquidity conditions right now? We can trade up or down on basically 200 contracts, and we could go all the way back up to the highs in less than a minute, like before I even notice what's going on, because I'm yapping so much, right? So what does that tell you? Okay, liquidity providers don't want to provide liquidity right now. They see lots of risk. They don't see a whole lot of a reason to trade. We're not seeing an auto-correlated order flow. So that kind of suggests that there aren't any block orders or informed traders out there, right? Instead, we are kind of in the middle of a bunch of noise where it doesn't take very much to move the markets, and so you just kind of get thrashed around, right? Not the best action to trade in, unless you know something. You know that here in 10 minutes the gilts are gonna like careen down again. Hey, why not sell it? I don't know, but I'm not confident enough in that that's what will happen. Okay, but that's kind of how I'm approaching the order flow. Okay. In my PDF, we'll go into the stylized behavior of markets. Those 5 things that are in that video. Oh yeah. Mustafa asked about the PDF. We're still writing it, so it's not there yet. We're still writing it. So David asked, level 2 equals the DOM and tape equals the time and sells. Yeah, you could. I mean, that's generally speaking roughly true, but here's what I'm trying to say. What people will come in and tell you is, well, if you want to be a successful trader, what you really need to do is you need to learn to read the tape, right? What is the tape? And then they go into the history of, the tape in the 1920s. And that's how Jesse Livermore, that's how he made money, was he would just read the tape. He's a tape reader, right? What is that really? It's marketing. It's marketing. What do we really want to see for an edge? We want to see empirical data, right? We want to see a study suggesting that a certain market behavior happens consistently, right? But your average trading educator out there that just wants you to buy something, what he's going to do is he's going to try and build up some story that is engaging and appeals to who you are as a person. To say, oh, okay, there were these tape readers. He come in and just read the tape, and he knew where markets were going to go. And you go, hey, I could sit here and read the tape, and that kind of sounds like me. That kind of sounds like me, and it's appealing to you. And then you want to learn their methods to reading the tape, which will probably involve technical analysis, right? Which we know is not very effective. So your level 2 tape indicator replicates the same you can read from the DOM. Yes. So that's my level 2 tape is basically a record of significant changes in market depth. I don't think it's called level 2 tape, right? It's called market depth tape. Should they be forbidden to hide liquidity? I don't know. It feels a bit unfair to me. No. I don't think that would work. Because you could change your mind, right? You could buy a bunch and then see something and be like, oh, I want to buy some more. Right? But it brings up a more so I'm gonna pick on you a little bit here, Tobias. Why does it feel unfair? Why would you be interested in being able to see all of the liquidity? Oh, maybe because you think that there will be some piece of information in the liquidity, if I could see it all, that would help me determine what's going to happen next, right? That's what it's really about, I think. Or this is the same thing with dark pools, right? Why do people dislike dark pools? Because they feel that information is being hidden from them, right? Well, I got bad news for you. The market depth and all of this information that you get out, it wasn't designed for you to be able to predict where markets are going to go. That's not why it exists. It exists to facilitate trade. It exists because it's necessary there in order for trade to be facilitated. And if they can have a market where you don't see the orders at all, unless somebody else hits into it for like block trading, and that facilitates trading, then that's gonna be provided, right? So really, if you want to know where the market is going, what's a better way to know where the market is going? Know the things that the big institutions that are going to move the market that day, know what they know. Know the things that's going to cause them to transact a big order that day. Right? Much better world. Now you're not relying on waiting to see somebody else do something and then try and mind read what it was that they were doing and make some prediction off of some pattern that you're seeing, right? No, you're predicting what's going to happen based on pieces of information that you have data suggesting that it's able to predict what's going to happen next. That it's able to predict their future orders, right? Like end of month rebalancing, or the fact that there is a really important non-farms payroll tomorrow, and that's going to cause people to be reluctant to trade, right? That's the fact that it's non-farms payroll tomorrow is a really, really big predictor of order flow that we got here. It's just that predictor of order flow kind of suggests that you might not want to touch the market. What's your block size filter? So I change it. But I think that right now in the 10-year, I have it set to 1,000. So if there's a change of 1,000 in the limit order book or in a market order, then it will show up. I don't know. I've found that since COVID, that those kind of like large orders haven't been very useful. Because basically we've gotten into this world where the liquidity is always so awful that just about anything can, you know, somebody sneezing can come in and cause the market to move. Like one retail trader coming in and taking a trade against the trend can create a reversal in those kind of environments. I'm not even joking. It's a very illiquid. Somebody brought this up on TikTok yesterday, so I think I'm gonna have to make a video about that today. Because there's been these people that have been saying, you know, how is it that the market is moving up? There's not enough retail traders to make that happen. Well, who said it was all retail traders? Look, there's volume in the markets. It's out there. There's no reason, there's nothing unusual about it either. Like there's nothing unusual about the amount of volume that we're seeing go through markets and all that sort of stuff. Right? And furthermore, because the liquidity is so light, it's very, very easy to move the markets right now. So could retail traders move the market? Yeah, they can. This is a key insight that we have, that the institutions have, that I think retail traders get wrong and really changes the picture for you, right? Is that it doesn't take very much money to move the market. The market is very what? Inelastic, right? You trade a bunch in there, price moves up, doesn't really change how much people want to buy or sell it. Doesn't change it much at all. And people can continue to buy. And those orders, every time that those orders come in, they move the market a lot relative to, you know, how big one order is. So when you know that should really change your perspective about what do you want to do, right? Like if I'm going to come in and I'm going to take a trade, I don't want to take a trade in a situation where Tobias could come in and flip the market on me all by himself, right? I want to avoid that situation. I want to be as far away from the situation where one person will screw me over as much as possible. And since the market, it's very easy for that to happen, I've got to be really conscious about when I decide to get into a trade. I want to get into a trade when I know something about what the future orders are going to be. It gives me a really, really good chance of predicting those future orders. And furthermore, I want it to be the kind of a situation where you would have to be stupid to know about that and want to trade against it, right? You'd have to be anybody. When I take a trade here, I don't tell you guys all that's happening. But if I did tell you, it would always want it to be a situation where it's like anybody that knows the reason that I'm trading now would have to be stupid to take the opposite side of the trade, right? I will let you know before I do it, Seth. Thanks. Actually, you shouldn't do that. That would be called coordination, and we're not allowed to do that. But you could just come in and say like, "Hey, I'm gonna buy it up now. Gonna move it. We're gonna move it." I don't know, guys. So we're in it's not that I don't know, guys. And I do know. What did we say? Around the top of the hour, we've been getting selling coming from the UK markets when they find out that the UK didn't buy any gilts, and you see selling. And what are we seeing right now? Saw selling. So I said not confident enough to take that, but given how that played out, it looks like that flow was strong enough to try and take a trade off of it. Maybe could have even made $20 off of it. Yeah. What were you saying? You don't see any useful info taken from the time and sells, i.e. you aren't interested to see what orders. No, I am interested to see what orders went through. It's just you've got to avoid the fallacy of, okay, I just saw a 2,000 lot order come through into the market. selling. I want to take a continuation based off of that. That's the way I used to trade. That's when we started the channel. That's the way I used to trade. And now I realize that that was flawed. Yeah, one guy sold there. Does he know something? We don't know. We don't know what he knows. Maybe we know what he knows and we have a really good chance of guessing why he did that. Okay. And in that instance, hopefully we were already in, right? We should have already been in. And then we see that and it's like, that's exactly what we wanted to see. They're like really puking now, right? But what do we know about the stylized behavior of markets? Price tends to rest where supply and demand are at their minimum. Ergo, if a lot of transactions happen very quickly in a certain area, that is likely to exhaust the supply and demand in that location and create an area where supply and demand are at their minimum. And then we don't go anywhere. So the big order, not actually really a very good signal to trade off of, is it? Maybe a great signal to get out, but not a good signal to enter into a trade, right? Because in other words, what I'm seeing in the liquidity and individual orders does not do a very good job of predicting the future, except for in a few very, very narrow circumstances, right? Like if I see like big buying like that, or let's say really big selling through here at 09, big lots selling at 09, and really big icebergs absorbing at 09 half. And let's say that it wasn't 09. Let's say that we were really close to 112. Okay, because we know that markets like to go to these round numbers. Then maybe I would be looking for further breakdown, right? So there's the point at which it's like it's a really high probability trade and everything. The robots take it, so it's hard to play those. Excuse me. Right now, there is one thing though that we can look at that might help, and that is seeing auto correlation in the market orders, right? If I see a buy market order right now, 0.5% more likely to see a buy market order an hour from now. So there's very, very strong auto correlation in whether the orders are buy or sell. That's what makes cumulative delta really useful. So if I'm seeing that cumulative delta consistently moving in one direction over time, that's pretty good sign that we've got a large meta order in the market, right? Right? Now, the auto correlation in the order flow alone would not be enough for the basis of a trade, right? But if I'm predicting that there's going to be auto correlated order flow in one direction, because that's essentially what our predictors of order flow are saying, is because of X reason, you're going to see a block order of some sort being transacted in this direction. Then I come over and I can see it confirmed in the order flow. Now I have a really high probability, right? Especially if it's a strong predictor of order flow. And that's how I'm able to have so many situations where my winners go way, way further than my losers and still have a high win rate, right? But it's confirmation. I need all of the things to come to line up, because the market kind of the market compensates for that, right? The market maker comes in and says, well, we're seeing auto-correlated order flow to the upside or to the downside or whatever it is. So I'm going to adjust my bids and offers accordingly, so that even though we're moving up, let's just say that the trend is up, because right now we are bouncing off of that low. If the market maker thinks, okay, the trend is up, he's going to adjust the offers that he has so that he can still make money from providing liquidity on the offer side, even though we're moving up, right? He's going to adjust how many orders he's putting out there and which prices he puts them at. and he's going to, to create this kind of a little bit of a random area around the overall trend so that he can still make money. So that's why just the order flow on its own isn't very good. But once you know you have a predictor of order flow, you can see it coming through. Your predictor of order flow says there's going to be more. Now you got to trade. That's how we do it. That's what I'm trying to do. Sounds like card counting. But doesn't the big order give you an idea if you may have a follow through or not? I don't think so. So the reason I say I don't think so is because I can think, especially in the 2017 and 2018 markets, I can think of so many times where I would see a really big market order and I would get super excited and be like, oh, this is going to be like one of those big trends and we're going to go and all of that sort of a thing. And then like it would flip on me. And, I did a little bit of like tracking things on spreadsheets during those times and stuff. And for a long, long time too, by the way. And my general conclusion from all of that was that it doesn't really give you a very good idea of follow through. In fact, I kind of think that it's actually the opposite. That if you're seeing a really big order come in out of nowhere all of a sudden, that was actually the thing that you wanted to see happen. That was like the trade. You're taking a trade because you want a big order to come through, and now the big order has come through and the trade is over. Is actually a more sensible trade. Does that make sense? So no, it doesn't necessarily mean follow through. Unless you're getting like, okay, if all of a sudden this market just busted higher and I saw like, 2K go through at like 3 different levels. Okay. What is that? That's probably informed trading from breaking news, right? But if we're just kind of middling around here and then all of a sudden I saw 5K market order transact at 12.5, that makes me less interested in trading it. Well, if you have a question, you should just ask it. Wayman? Oh, I don't know how to say that. Is that an Arabic name? Adeliaziz. Oyaman? It's kind of spelled like Ojai, but it's not quite that. But maybe I'll just call you Ojai. Is it okay if I call you Ojai? Not to pick on you, but and it's okay on stream, but one of my biggest pet peeves is asking if you can ask a question instead of just asking the question. Because see, now we have to wait. You could have already asked a question. I could already be in on what, answering it for you. Right? But you ask the question, especially online. I mean, like in real life, you do that, right? And it's polite. But in online, because people might not read it right away and everything, it could be wasting 30 minutes. Just ask the question. Just be direct. I'm an American. We're okay with that sort of thing. Do you think that the treasuries can skid all the way back across this range and get to the highs? Call him Aziz. Abdelaziz. Abdelaziz. I think that's how you pronounce his last name. Aziz. I tell you, one of the things that is the most, excuse me, one of the things that is the most fun with the stream is getting to have viewers that are not in the US. I mean, maybe part of that is the time of day that I'm stream. I'm more likely to get people from Europe and Asia and stuff. Maybe if I streamed late at night trading, then I would get a lot of Chinese and Japanese people watching. But I guess it's just the novelty of it. But like other languages are so interesting to me. If if it was like one of those things where like I had 1,000 different lives to live, and I knew what was going on and what I wanted to do with every life. One of them would definitely have to be, learning a bunch of different languages. Because I want to speak Mandarin, I want to speak Korean, I want to speak Arabic. Arabic is a super interesting language. What about a buy iceberg at a support order, sell iceberg at a resistance? So how do you define what support and resistance is? Coding is a language on its own. Logic is a language of its own. Sure. I want to know if just from the big order can I know where the market is going to go. No, I don't think you can. The one big order, not a very good indication of where the market is going to go. At least so let's kind of qualify the domain of that, okay? If you see a big order, really good chance that the next tick is going to be a tick up. But that tick up is probably going to be because of the big order. You might see it tick up and you might see them take it another tick beyond that, right? So there is a really good chance that you will see continuation from the big order, but it's such a small, amount that you can get out of it that basically only high frequency traders can take advantage of that. But can you use the big order to predict where we're going to go and where we're going to be 30 minutes from now? No, it's not very effective at doing that. More times hit the price at the same level. So here's something interesting. Okay. I'm gonna well, so let's backtrack a little bit first. Let me teach you something else first, okay? Like we already kind of talked about it, but markets are inelastic. Okay? What does inelastic mean? So if something is elastic, then what that means is if the price of that thing goes up, not as many people want to buy it, right? Price goes up, not as many people want to buy it. So elastic basically means you have a rubber band and it's very elastic. It's going to be pulled back into that spot very easily, right? People see these distributions and everything like that, and they say, well, the reason that happens is because the markets are elastic. But actually, when we go and we do a proper empirical study of it, we find out that the markets are very inelastic. So if a bunch of orders trade and buy it up, it has like no effect at all on how many people want to continue buying it up or sell it or whatever. That the reality is, especially when you're looking at it from like a top level, like the whole stock market, what controls whether price is going to move up or move down is mostly like how many people are contributing to their 401ks that month versus taking a distribution, etc., etc. Okay. Order flow has a very, very strong impact on prices because the markets are very inelastic. Okay. So from that perspective, what would you expect to be looking for the market to do? Should you be looking for mean reversion? No, not really. Just from that piece of information wouldn't make you want to trade mean reversion, would you? It would make you want to trade breakouts, right? Because the orders have really strong impact, and that means that a market can like move really, really far away from where it's supposed to be very quickly, right? Okay, but we do see we do see mean reversion in markets, don't we? We do see mean reversion in markets. So what causes that? Well, so there's two things that will cause mean reversion in the markets. One, we already talked about, that price tends to rest where supply and demand are at their minimum, right? Place where all of the liquidity has already been exhausted, they'll just kind of like sink back into that hole over and over and over again, right? The other thing that will cause mean reversion is correlated assets, right? So you'll have two assets and they'll roughly trade in correlation. And if they get too far away from each other, then robots are going to arbitrage it and bring it back into line. And so that creates mean reversion in the markets. Okay. So from that perspective, if we're going to trade mean reversion, those are two things that we would want to see to want to try and trade a mean reversion. One, that correlation kind of suggests that one of these things is out of line with each other and it's going to come back in line with it. Or two, I can see like a liquidity hole and I think that liquidity hole is going to suck us back in, right? That's very, very different from what people refer to as support and resistance. So think about it. At the lows here, we've touched the lows of the day. Actually, I think we did extend it by one tick. But essentially this area down here at 09 half, we've touched it 3 times now. So from a technical analysis perspective, you're probably thinking, hey, that's a good support level. That's a good support level. But look at the volume profile there. Look at the volume profile there. Is there some big buyer holding support there and preventing the market from getting through that? Hardly anything traded down there, guys. 564, 1500, 2500. It's like a nothing. That's like 3 guys traded down there, right? Reality is there's not a whole lot of interest down there yet. It could change, but so far, not a lot of interest down there. So why did we move back up? Because of the liquidity hole, not because of support and resistance. And so the general thing that I have found from watching this is that the kind of situation where, you know, price is bounced off of a certain price like 3 times, and then you come down to that price and there's a huge iceberg at 09 and they're not able to get through the big iceberg at 09, and then buy orders come in and take us back up to here and all that sort of a thing. Never happens. Literally, I can count on my hand the number of times where it's like, you know, there was like a really big support somewhere and it moved. And that ended up being like really indicative of where it was going to go. The only times that I can remember where I saw something like that was really, really strong and predictive of where we're going was during the COVID crisis, when we would see large amounts of buying. They wouldn't occur at places where like price had stopped multiple times, but the market would just come down into a spot, and then all of a sudden the market makers weren't stepping out of the way, and a massive number of contracts would be bought down at the lows, and then market orders would start rushing in and pushing us up. And I believe that those were the plunge protection team. I believe that order flow was indicative of the plunge protection team. But so to summarize, support and resistance isn't very useful. That's not how the market actually works. What's the meaning of that center line? And you mean like the bold white line in the very middle of the DOM? So that's just the last time that I reset things. So right now, prices moved down a little bit. It's actually now would be a really good time to reset it, because I want to be able to see, okay, we moved up off of the lows. Which one moved more, the 5-year or the 10-year? So how did you do that? Well, I reset it. So if I click that button, it will reset them all to be back to the middle. And that line is just telling me that's where price was last time you reset it. And from there, I can kind of judge, okay, All three of them ticked down 1 tick. If they all tick down together, no change in the spreads. That's what that's all about. What is a liquidity hole? By your meaning? Okay, so a liquidity hole, I define a liquidity hole as my word. I'm probably not the first person to use that word, but I'm using as my own definition an area of low latent liquidity that causes price to fall back into the hole over and over again. Kashkari says something interesting here. He says that this moment feels like stagflation, but that it is a transition. And furthermore, I'm not concerned about stagflation. That's awfully positive outlook from Mr. Kashkari. So by the way, Kashkari, I give you an insight that I've learned on Kashkari. Kashkari is probably one of the most dovish members and the most liberal members. So just kind of keep that one in the back of your mind, right? Whereas Bullard is probably the most hawkish and most conservative right now. Oh, I missed the little tweet from Nick Timiros. Clients are asking if we foresee an immediate shift from the Fed given other central banks' actions and the sharp risk asset moves. We think these concerns are misplaced and that the Fed's job is still far from over. The Fed will keep hiking until the labor market cracks. Well, I don't like their use of the word cracks. So I love to bash on support and resistance. It kind of makes me apprehensive to say it because I sit here and I'm like, 007, he likes support and resistance. He's not going to like hearing that Seth thinks that support and resistance is a misleading and false model of the markets. Notice that you don't clear your trades. Why? Oh, you're okay. All right, good. Because, you know, I didn't go in. I made this video on Monday, right? Which was price action is garbage. And because one of the things that I see a lot of price action people talk about is support and resistance. So I was going to go on a whole big rant about support and resistance, but, you know, I kept it simple. Maybe we'll make another video that's just about support and resistance. But go and look. So like a profile here would be like another example is like, if you saw a volume profile that was like this, you know, really thin, and then down at the very, very bottom, really big, you know, right? Think about that volume profile. That's what we would expect to see at support and resistance, right? So like there's tons and tons of support. Yeah, the B shape. But I think what you're gonna find is that doesn't really happen. It doesn't really happen. It will. What is more likely to happen if we're having a trend, like if we break through, or we're going to go a little bit further down and then come back and you know, it's going to be a little bit. You're never going to see like the point of control at the low of the day, right? Or even like a few ticks from the low of the day. Although that's kind of a hold on, I need some water here. Okay, so Kashkari is saying that we are quite a ways away from a pause. So he is being a little bit hawkish here. The market's not reacting too much to it, but we do have a risk here that because of the central bank job owning that the treasuries move down here. There is little evidence that inflation has peaked. Overshooting is a risk that's possible. In other words, we accept that risk is what I think they're saying. Yeah, so what I was going to say about volume profile is You kind of got to be careful with the volume profiles, because with the way that most people read it, what you're going to find is that the point of control almost always ends up being the close. Like the reason that particular district, like let's go and look at the S&P 500 right now. I don't, to be honest with you, I was thinking about, because somebody was asking me about this chart, and I was like, yeah, you know what? I don't really use it that much. I don't really use it that much. So let's add something on here, okay? I'm gonna come in here. I'm gonna add an indicator that is essentially a line at time. Part of my free suite, line at time. This one is gonna be 7:30 my time, gray, and then I'm gonna add a second one, and that one is gonna be at 1400 my time, which is when the market closes. Okay. I'm going to change the colors of those lines. ZA, how's it going? Welcome back. Let's do olive. Yeah. I think olive sounds nice. Just give it a little bit of color. Okay. Oh, and I don't have them set the same width, so I can't. And I can't. Line width 2. Oh, 1. Okay, fine. 1. Okay. So now, let it load up here again. Come over here to the charts, show you. Okay, so we got this thing. Okay, so what do we got here? Here's where price was at the open. Here's where price was at the close. What do you see in the volume profile? Here's the open. Here's the close. Right? Here's another one. Here's the open. Here's the close. What do you see in the volume profile? A little bit at the open, a little bit at the close, right? Here's the open. Here's the close. What do you see in the volume profile? A little bit at the open, a little bit at the close. There was a big one in the overnight session. This area might be interesting. Okay. Here's another one. Open, close. Yeah. What is the volume profile in the S&P 500 actually telling you? What the open and close was? When you see that, doesn't that just like completely destroy? When I realized that, because I didn't realize that. I mean, I that was just kind of a realization that I made on my own. Nobody showed that to me or anything. When I saw that, I was just like, everything that I had thought, because the people that love the volume profiles, they trade the E-mini. They trade the E-mini, right? And everything that they're doing is based on like point of controls and value areas and stuff. It just absolutely completely decimated my entire opinion of volume profile when I realized that. It was like, holy shit. Everything that they're looking at is really just the open and close. Like, what the heck? It's not really telling you anything useful at all, is it? Right? Now, when we're trading through here and we can watch it develop, this is a different thing, right? Like, these distributions do happen for a reason, and we can see them as they develop, right? And we should be able to predict where that point of control is roughly going to be. That's a good game to play. Is try and predict where the center of a distribution is going to be. But and so could volume profile be useful to understanding what was going on in the markets? Yes, if if you could somehow remove all of the remove all of the volume that happens the first and last 30 minutes of trading or something. But then if you remove all of that, you kind of just get all of this no man's land in between. So that's maybe not useful either. You know what I mean? You get what I mean? Maybe I should make a video that's like why volume profile is garbage. I'm not going to say volume profile is garbage, but I should call it the problem with volume profile. Delta volume is more useful. So when you say delta volume, are you talking about cumulative delta? Are you talking about a candlestick chart? Or are you talking about just individual bar delta? I do agree. I like to watch the cumulative delta. That's a bar delta. Okay. Sure. I do think that those candlestick charts, or sorry, footprint charts can be really useful. And they do kind of show you things by bar delta. But what I think is even more useful is just a really granular cumulative delta, right? So once you start watching the cumulative delta, you realize market orders are really direct where the market is going for the most part. And it's an unusual situation when you're seeing cumulative delta going one way and the market's not going with it. That kind of suggests that there's something weird going on in relation to the derivative that you're trading. Jim Iorio is saying something super political that I super agree with. And I just don't know if I want to get into it right now because we're having a good discussion about order flow. I'm glad you find that interesting, 007. So I want to return back to what kind of started this whole line of conversation, right? Because now I've taught you like the major insights that I have learned from studying order flow. And when you get down to the end of that, is it that sophisticated? Is there this little secret, that pattern that helps you find? No, it's not. It's not that sophisticated. There's some really key insights in there that are really counterintuitive, and that I don't think there's any way that humans would have discovered these things without science. Essentially, that's the way that we were able to find them. Is quantitative finance powered by math and science. That's how we discovered those. Okay. But once you know them, they're actually kind of simple things, right? That's it. That's it. Because you probably were coming in here to my stream and you were thinking, well, the thing that I was doing, this technical analysis thing, not really working out for me, or I'm just not so sure. There's so many people doing technical analysis that's not working for them. I don't think but I do want to do trading, and I want to be the best at something. So what is the thing that I should go and become the best at? Well, order flow sounds like a good thing. And here's Seth's stream, and he seems like he knows the most about order flow. So I'm gonna come in and watch Seth and become an expert on order flow. Guess what? You're all experts on order flow now. You know more about order flow than the average trader, because the average trader knows all of these things about order flow that just aren't true. And where does it get you? You're probably thinking like, oh, actually maybe it wasn't that useful. Why is it? Because I tell you what's the thing that's going to be useful to you? What's the thing that's going to make you money? Predictors of order flow. Understanding the news, understanding what sort of players are going to be in the market that day, and things that can predict what the future orders are going to be. I said predict the future orders like 4 times in there, but you get what I'm saying? Read the news, man. That's, if you want to become an expert in it, in something, become an expert in news and models of institutional trading strategies. So there's this guy that works for Nomura, excuse me, named Charlie McGilliglot, I think. I forget how to pronounce his name or how it's spelled, but McGilliot, something like that. And he posts regularly in their research these models about how much buying and selling we've seen in the market from CTAs and how much buying and selling we've seen in the market from gamma hedging. And those are 2 very, very strong flows in the market that are predictable, that are really effective predictors of order flow that you want to use, right? Become an expert in that stuff, because that's where the money is, man. Order flow is really, really useful. But from the perspective that we're getting over here, right? Order flow is not really the edge, right? The order flow is kind of like the minimum, right? The understanding everything that I just told you about order flow is like minimum effort. And the thing that's going to give you an advantage in making money is combining that together with what you know is going on in the markets, having information that other people don't. Not trying to beat a dead horse over here, but if market orders are what moves the market, how does a lack of liquidity suck price back into a liquidity hole? Okay, this is a good question. Okay, so let's game it out. Let me show you kind of how it works. So the way that they discovered this is, no, that's not how it was spelt. Well, anyways, in Taiwan, they have something called a Walrushian auction, which is that you put in your limit orders, and then at the end of 5 minutes, they're matched. So there's no such thing as a market order in the Taiwan market. You can only place limit orders, and like every 5 minutes, they match them. So you're going to have, here's all the sellers, they place all of their orders. Here's all of the buyers, they place all their orders. There's going to be an area where they match up with each other, right? So these right here in the middle where I'm fill it in, those are the orders that are filled and will be removed from the markets. So if everybody that had an unfilled order put their orders in again, is it blind? I think it is. I think that it's like you don't see the results until afterwards, but it doesn't matter. It's not relevant to what we're talking about. It's a good question though. So what will it look like if you just had the people that were unfilled, right? It'll look like this, right? It'll look like this. There's going to be a hole. That's the hole, right? Okay. So if you have a couple of orders come in and buy up here, right? Yeah, you're going to move price, but guess what? There's going to be like more offers here. And if you get too low, there's going to be more bids here, right? And so because of that situation, it's easier for the market to just settle in this middle hole, right? And furthermore, like market participants realize that that's happening, right? Maybe by me telling you this, the probably makes the hole stronger, right? Because now everybody knows, okay, might not be much of a point in trying to look for a breakout here because it's going to be hard to get a breakout here. Now this eventually fills in. This eventually will go to where it's filled and you just get an even distribution, but it takes like 45 minutes for it to happen. And you can kind of judge that based on like how many limit orders are actually being placed and that sort of a thing, right? That's how the hole is formed, right? So if market orders come through, something that you'll see a lot, and this is a really good, I'm thinking that this may be a purely technical trade that you could try and use during a fast market, is you have a move down, right? And then there'd be like big transactions right here. And so you'll start to have the liquidity hole in this area, right? And then orders will come in and really shove it down again, and it will snap right back up into the liquidity hole. And I think that this is like the end. When you see that, that means that like the large meta order that was pushing the market is finished. I think that what they're doing is they're like, just one last hurrah, get the last volume that I have out really quickly. Right. Okay, so at the moment, the market is a butthole. Yeah, it is. It is. Like we had a good move down to this lower end of the range, but then what has it been doing? It's just been randomly going around 15.5. Because there is a liquidity hole at 15.5. Does that mean that they can't move out the bottom? Doesn't mean that they can't move out the bottom. It just means that it's going to take a lot more sell orders to break the lows than it will take buy orders to move back to 12.5 is what it means. Because the liquidity, the latent liquidity, will be higher here than here. That made sense. Cool. Cool. Now you know the key things about order flow. Maybe I should be telling it like that. It's like, listen, one session with me and you know what's going on. Nah, it's not one session, because it's there is definitely something to it. Like, I wish that I could quantitatively express, okay, so wow, there it was. So you see there, it did take more orders to bust through, right? They had to trade a couple of thousand lots there to do it, but there was some sell orders. They came through. Now that bust kind of, I can see it affecting me. I can see it making me think, yeah, we should go for a continuation now. This is going to run. But liquidity is still pretty crap. One of the things I've been struggling with this week is that I really don't like trading when level 2 is below 1,000 on the 10-year. Seems like when it's below 1,000, it's not. It tends to not be very good trading for me. So I think I need to stay out. I do think it might have been something Kashkari said there. Good move. That was the other thing that I've been talking about. This is something that I've just noticed on my own, and I don't have any empirical evidence to back it up, but there definitely seems to be these situations where there's like a range you can define based on volatility, and if you break that range, you will get an increase in volume very briefly. Sometimes those will come back, but like those are the breakouts. Those are for real. Like there had to have been stop orders there and stuff. Freaking Evernote. They update for such a simple application. It really drives me crazy that they update that thing like every other day. What the heck are you guys doing over there? You should be able to Evernote. Listen, you're the kind of application that you should be able to have like major updates maybe 4 times a year and maybe critical bug fixes, and that's it. You shouldn't be updating the application every other day. It's stupid. It's annoying AF to me. Big order down there at 404.5. But so here's an example of where you would say, oh, that's a big iceberg. That could be support. Market's going to come back up there now, right? I'm going to bet you. I'm going to bet you that 04.5 is not the low. I'm going to bet you that either either it's going to go much lower and touch like 112 and form a distribution there, or you're going to start to see this sort of a thing start to form. Actually, when I look at it, so the big issue here with me not taking a trade, main thing is liquidity is bad. So I see liquidity is bad, I'm not going to take a trade. That's the end of it. But let's say that the liquidity was okay. Next thing that I would be seeing is that we are pretty close to a round number. Wait, when did I say I'm not going to pay money for something I can just do? Oh, right. Yes, I remember that. We're talking about Evernote, yes. Oh, man. Yes, Tobias, I saw that. And I tried logging into it yesterday, and it wouldn't let me add any instruments. Like, I'm like, okay, so let's add the 10-year treasury onto it. It wouldn't let me do it. So they have a web app, but it is hyper basic. Super basic. But makes me excited for the future. Yep, here I'm. Oh, okay. So today, the British bought 154 million pounds in gilts. And yet the market was pushing down quite aggressively. That's probably not a good sign, is it? It's probably not a good sign, is it? Well, let's come back over here to the chart now and kind of see what damage that did. Okay. So it is a break of yesterday's lows, 28.5. So right about where we saw all that volume puke might have been people, you know, looking for previous day's lows. And, you know, it's kind of rough to see here with, because I don't know when this exact thing with the UK came through and everything. It may be that this should be more like here. Let's just call it 112. Let's just call it 112 even. Would be like the next really key spot. But what does that suggest to you? That round number, man. I think there's a good chance that round number trades. As also, I was right here, right? You can already see it. Look, the little distribution. We could form a really strong liquidity hole over 04. I'm thinking right now that there's probably still some sell orders to come through. It was a really, by the way, we sold like 20,000 contracts in the space of like 10 minutes. Like the puke lower there was really strong. And we're back above 3.8 as well. That's a wowzer, because we were at 3.575 today. Jeez. So that would have been 50 bucks, 60 bucks. Well, I didn't say remember when I went through all of the things, I didn't say it's not going to move today and that you wouldn't be able to make money off of it. Just that I don't have anything that really good to tell us where we're going. Because based on what the liquidity was, they're probably likely to continue to have like these wild moves. And that was kind of why I was a little bit extra protective, was because it was like, okay, poor liquidity, me not having very much to go on. If I took a long, that would have been devastating, right? And there were some periods where it was looking really good long. I hope that Mr. Bond earlier got out without too much damage on his long. Yeah, I think we could still have another flush to get to 112, but I'm not sure if the trade at this point makes sense from a risk reward perspective. So you're talking about 6 ticks. And on the upside, there's a chance to get pulled all the way back up to 8, right? So how am I making that determination? I'm just looking at, we rushed through this whole area starting from about 09. We went from here to here, just like, right? So that means that there's probably the offers here in this location, there's not going to be as many and they're going to be skittish. So you could potentially have a liquidity hole all the way through this area right here. Who said nobody said newbies trade ES? Oh, did I say newbies trade ES? What I did say was volume profile traders love to trade ES because the most prominent person in that space is Futures Trader 71, right? Jack Pro CBX posted a picture of Hihachi laughing. Oh, how am I drawing on my DOM? I have a little tool here called the Epic Pen. It's this little thing right here. See this little tool? And I can do... Usually I do it with a highlighter. Whee! And I can draw a picture. You know, I actually have a... where is it? Oh, it's over here. You can't reach it. I do have like an electronic pen sort of a thing so that I could do it with my hand. Well, here's the thing about Futures Trader 71. He has like a video series. I think that's the best video series from him on Futures IO about scalping and everything. And he goes through all of this stuff, right? And then at the very end, he says that like, well, you might see a correlation and a thing in the market, but like those could totally change, right? So he was basically saying in a roundabout way, like my takeaway from it at least was that you can't really rely on technical indicators giving you direction as the basis of your edge. And because he'll say it's all about the risk management. And what is risk management to him? Well, risk management to him is like take a few contracts and then have some of those contracts be a little bit closer and so forth. What is that actually doing? It's changing the kurtosis of your returns, essentially. It's basically making it so that most of the time you're going to get a little winner. And every once in a while you get a really, really big winner, so you have a really, really long right tail, but it's also going to make your left tail a little bit bigger because you're going to have a day where you just lose you're going to lose the full load like 5 times in a row. And that's going to be like a massive drawdown, right? So it's noise trading. To be honest with you, it's noise trading. Like if there's not a predictive component of it, it's noise trading. Now he does have some stuff about like point of control and all of these stats that they're doing. I've gone and done my own work on that, doing the exact same thing, and I did not find statistically significant information. Will there be significant sellers if we take the opening in ES? So I found that ES reacts a little bit differently to the treasuries, to these ranges that they form. What I'm seeing overall is that the market orders in ES are largely to the downside. So it does look like you got a good chance that continues to push down. Anyways, so on Futures Trader 71, what are we saying? Well, so he has a lot of really good information, doesn't he? And he does understand what he's doing to some extent, right? He does understand that it's noise trading essentially, and that he's making money from taking on risk, right? And that the problem with taking on risk is that you're likely at some point to encounter a far left tail that blows the account, and that you're going to have to be able to tell when you're in that situation and stop it before it happens, right? But wouldn't you rather be trading on a predictor of order flow? And he doesn't understand, or I've never heard him say anything about like the predictors of order flow that we talk about.
maybe at some point he will start to put more research into that. But he does talk about news, right? He is saying that like a significant portion of the edge in predicting where price is going to go is knowing what's going on, right? So I really feel like, no offense, FT, but I feel like in terms of a quantitative understanding of the markets, I've really leapfrogged most other creators in the space. Now, some of these other creators might have some other advantages on me that might matter more, right? Like FT71 is probably going to be a lot better at putting the risk on when he has the advantage and he knows it than I will, right? I seem to have a really hard time getting as much out of the winners as I would like, for instance. And I'm very risk adverse. I don't like taking on a lot of risk, right? But in terms of like understanding the quantitative and statistical behaviors of the markets, I don't see anybody else out there showing an understanding anywhere even remotely close to mine. The reason I say that is not because I think that I'm this all awesome end all be all know it all about order flow or whatever. It's just that I'm looking at institutional traders, right? I'm looking at what I know compared to the institutional traders, and it's not anywhere even close. You know? So it's like me and in terms of quant stuff, me and most other influencers, there's traders that understand this stuff, but influencers, me and other influencers, I don't think the other influencers are anywhere even close on the quant stuff. But then you compare me to institutional traders, and that's not even close. You were just short, yes, for a scalp. And I don't think I saw any news here. Although I think that what may be going on, well, this one kind of played out a little bit weird, and I stayed out of it just because the liquidity is really poor. Even though I did say at 04, I was like, I think that they're probably going to see 112. So that was a good call. That was a good call, but there was only about $15 in it so far. Anyways, so who are the people that I admire? The people that I admire are working at institutions, man. And especially the guy that wrote this book, man. This book, Trades, Quotes, and Prices, Markets Under the Microscope. Jean-Philippe Bouchot, who basically, he studied physics. Like, he went to school for physics, this guy. This guy went to school for physics and then started working for financial institutions and applied what they knew about physics to markets to learn about the market microstructure. These people know so effing much. It's just mind-blowing. You come into any one of these chapters and look at the end of the chapter. You see right there, further reading, every one of those little blurbs is a study. And look, there's a second page here. There's a whole second page of studies you can read about this stuff. And then these guys know about all of them and have read them all and stuff. It's just like, what? What the what? There's so much to know about it. Mike can come in, like, that's what I was saying. Like, I come in and, like, what's relevant to us, I think. And I think I can summarize it fairly quickly. And like, you're light years ahead of most retail traders, right? But, like, once you get to the level of an institution, then there's all sorts of other crazy stuff that starts to become relevant too. So yes, Jean-Philippe has really become, I really like that guy. I have to say, I fangirl over Jean-Philippe every week. He has a LinkedIn, and he's very active on his LinkedIn, and I love everything that he posts. He is by far my favorite. But listening to this all, you probably are thinking, oh, I have a really low opinion of most creators.
which is not true. It's especially not the creators in the face. So Anthony Crudelli and Futures Trader 71 in particular are really good. They're really good. There are some things that I feel like I know that they don't, and I would like to see them talk about them at some point. But I'm not sitting here being like, ugh, these other creators, they don't know shit, and I wish that they would go away and everybody would just listen to me. I don't feel like that at all, because I feel like that both of those guys do something that is important for the retail trader market to have that I'm not really interested in doing. And they do it really well, and there's no way that I would be able to do it as well as they do it. You know? Like for instance, it would be nice to interview a couple more people, perhaps, but to have like a regular show like Anthony Crudelli has, where you talk to people, I would be the worst at that, I think. I'm not very good at keeping track of people and keeping track of relationships and building all of the relationships with people and getting people to be able to come on my show every week. Jim Iorio was another one that I would put under that umbrella, right? And then Gary Norton is another one that I really like. What he knows is limited to market making, which is kind of hard to make money from doing as retail traders nowadays, but I still think it's valuable information, and I appreciate what he's doing over there, right? So there's, especially when it comes to futures trading, there are some really, really good creators, and I hope someday that I go to some trader conference or whatever and I get to meet these guys and shoot the bull or whatever, right? I really like them. Right. The people that I like don't that I don't like are like the and I won't like name names. The people that I don't like are the ones that are selling price action courses and books. People selling price action courses and books, I think a lot of those people are outright charlatans. Like those, when I made that video about price action and I was talking about that's who I'm like, if you've been around in the industry and you know who's selling the price action, you know who I'm talking about, man. Some of these people are straight up charlatans. They are not making money trading. They're charging people exorbitant amounts for their education. They've been doing it for years, and they know that all of their students fail, and they continue to sell. They're charlatans, 100%. Learn about trading and you'll become a successful trader. What else? No, that's the sad thing about it, man. I really seriously think that the greatest trader of all time, and I don't know who it was, but I think it's very likely that the greatest trader of all time never really made a whole lot of money from it. There might have been a person out there that really understood markets really, really well, for his time at least, but had bad luck or whatever it was and didn't really make a whole lot from it. I think that you kind of have to separate. Yeah, James Simmons, maybe Jim Simmons is the greatest trader of all time. It might be. He's the greatest quant of all time. Like they're extending, man. They're extending. So, oh, you know what? I'm being so ADHD, okay? Because you were asking me the news. Greg was asking me the news. So here was the news, okay? First of all, there was the buying operation from the UK central bank. Past few days, they hadn't been able to buy anything. Today, they bought a little bit, okay? Today, they bought a couple million, right? Another thing was that Kashkari was speaking. And Kashkari basically said, like, the concern is stagflation, but I'm not really too worried about stagflation. But we're not anywhere close to doing a pause, and the Federal Reserve needs to keep on its current pace, which was, in my opinion, a little surprising to hear coming from Kashkari, who tends to be dovish and liberal. So if you were sitting down there saying some members of the Federal Reserve are concerned that we've front-loaded interest rate increases too quickly and that we may need to slow the pace, and I would have expected, although Kashkari is not one of the board members, he is one of the regional bank members, and I don't think that he's a voting member this year. He's a voting member next year, but he is one of the people that I would expect to be saying like, well, maybe we were too fast. So for him to have come in and said what he said, I think was a little bit bearish, and I said it at that time that it was bearish, but I was also kind of like, well, I don't know. The amount of volume that we've seen come out here to the downside here, because it's been all since from the peak, like from the highs of the morning, it's been a net 30,000 contracts down. So this is quite strong down. Nick Timiros quotes Quarles, does the Fed have the guts to stay the course? The answer is not just yes, but yes unquestionably. So I think that the central bank job owning is a major factor behind why the markets have sold off in the manner that they have. We missed that trade because I didn't want to trade it because of the liquidity. That's okay. Now that we've missed the trade, is it worth chasing? Well, when we were at 06, you know, I was like, it's worth chasing, but I don't know if no, it wasn't 06, it was 04 half. When we were at 04 half, I said you might be able to chase it and get a little bit. Okay, so we might have been able to make $15-20 off of it, but from here now, I'm not sure I can make any such call now. Oil is dead. Well, I mean, they're still trading a whole dollar range though. Leave a like. You know, I'm so bad at asking you guys to leave likes, but I don't know. I think that I kind of like gave up. Because you know what happened, right? Was like we had like during the GameStop time period, the channel was like doing crazy, right? And even going into that, before that, we were averaging more like 30 viewers, and I think there were even some areas where we were getting to like 50 viewers, right? And then after GameStop, like YouTube changed the algorithm and they just stopped sending people to live streams, and ever since then it kind of went down. And then this past summer was really bad. Now that the summer's back over, we're getting back into, we're usually around 24 viewers. I feel like that it doesn't matter what I do, that the viewership doesn't change. You know what I mean? It's a little frustrating, but like in order for me to get more viewers, I have to like do better on TikTok and Twitter and be able to convince and pull over more of those viewers over here. But it's okay because we don't need a ton of people. So I think that if you go and you hit that like button, and there's 21 of you watching, so if you all hit the like button, that would help. And I think that if we have like 16 to 20 likes, that especially early on in the stream, that does really help the stream out. But at the same time, I'm kind of like, yeah, it is what it is. It doesn't matter anymore. That was vacation time. All the kids, yeah. And it's frustrating to me. I wonder. So this is something that's so hard. And it comes up in markets, and it comes up in all sorts of things all the time. Is you get situations where, number one, you can't necessarily see where you're at that time, and then you can't really see what's causing it to go a certain way, right? So if my viewers on the channel has gone down, why is that? Right? Like we had a lot of people come in during the GameStop fiasco, right? And almost none of them stuck around. So was that just because YouTube stopped recommending the content to people, etc., etc.? Was it because order flow in futures and treasuries was just not interesting to those people? Was it because Seth just wasn't interesting to those people, right? If it's Seth is not interesting to those people, that is presumably something that Seth could work on and improve upon. Not sure where I would do that, but could be something that we could work on, right? But I don't get any such information to let me know why it happens, right? Viewers like to see action, and it's more of an informational, intellectual talk here. This is probably true. So I have some YouTube shorts where I show some trades and some action, and they continue to get a steady flow of viewers, and probably need to do that more often. But I haven't had a trade that really was cool in a while. It's been a bit of a slog the last few weeks, hasn't it? The trading and last week's trading was not good. Yesterday wasn't good either. Although it was not as bad as it might have seemed if you were just watching. So, because I stayed in that trade that we had yesterday and basically got out at the lows and made most of it back. So yesterday wasn't so bad. And I am still up on the week and positive in the account, but not as positive as I'd like to be. It's been a bit of a slog. And this kind of move where it's like I'm in on something and then it just does something mondo crazy, that's really cool to watch. It hasn't happened in a while. You're right. The informational, intellectual talk, it's probably not as interesting to people. Sure. It's okay. When I look at my channel metrics, videos continue to do well. And there's a lot of videos. Oh man, there is a lot of videos where I put them out and I was, pushing them hard at the beginning and really wanted to see a good amount of traders view that video and see it take off, and they just didn't. The reaction to those videos when I first posted them was below average, and I was really frustrated by it. But those pieces of content have shown themselves to have longevity. Your screen is set up as understood by seasoned traders who don't need to watch. Why I suggested charts under your ladders? Yeah. Well, I put the chart up here on the left. The chart up here on the left should be okay, I recognize that he has the S&P 500 up. I don't know if it actually is effective at that, but that was the idea behind that. This other stuff is supposed to be what the F is he looking at? If you're new, I want them to be wowed by all of the numbers on the screen. Did we find the bottom? Maybe. Just based on the volumes and the flow and everything that I'm seeing here, it looks like the orders, that the flood of orders trickled out. We haven't developed a super clear liquidity hole. I think there's still some risk of retracing back up here to this 404 area. Might even be like we saw 2 days ago, where it's a really aggressive push up and then it comes back down. But the flood of selling that we saw might have been something that they were always looking to sell, or some country selling, and there could be more to it. So we kind of have to sit and wait probably until 9 o'clock to see. 9 o'clock my time. So the top of the hour. Maybe at the top of the hour, then we would be able to more clearly say. But a chance that we found the bottom, yeah. Yeah. Now on TikTok,
I'm having more success on TikTok lately. Like, it used to be, it was really hard to get 1,000 views on a video. Now most of my videos get 1,000 views. So that's good. And people and there's a lot more conversation on my TikToks. So that gives me subjects to bring up and move into the next thing and et cetera, et cetera. So that's good. But getting those people from TikTok to the live stream is a different thing. I guess it doesn't really matter. I mean, in the end, how many people, like, well, I already said this, right? But the number of people that are viewing the live stream is not really a very important metric to me, right? The most important thing is that the people that are serious about this are getting the information that they need to stand a chance. Because most retail traders that come in, they're not even playing the same game. They're not even playing the real game. It's like coming in to Sonic Adventure and you know, just seeing the chows and holding the chow and being like, oh, that's cool, and then leaving, and okay, that's all there is to this game, and not playing through all of the levels and not finding out all of the different things that you can do with the chows. It's like, you know, that's how I feel most people are. So the helping them, and the live stream is the most critical component of that, because this is where I get to help live and we get to see it live, and seeing it live is the most useful thing, to see it in practice and learn from the current market, right? Most important thing. But the number of people that are doing that, not too important, right? That's the most important thing. When we get into, okay, but we do want to have success with the YouTube channel and that sort of a thing. And ideally have enough success to where we could focus just on the YouTube channel, right? Instead of having a day job. Okay, well, so for that, how many people view the live stream? Still not very important, right? For that, what matters is how good the VOD videos are. And the VOD videos have been doing better this month. Like, I've made some good progress. And that video about price action, I'm not seeing it pull in search. I'm not seeing it pull in non-subscribers yet, but it is going above trend now. Most videos. Here, I'll show you. You think that? I think it probably will. I don't think that I'm there yet, though. I don't think that my content is really engaging enough yet to really, you know, run get my entire income from the channel. Now, my Ninja Trader indicators, I think that they are actually. The more I get into this, the more I'm like, I'm providing something from Ninja Trader that nobody else is providing, and is done really well and is extremely useful to traders. That's so useful that every Ninja Trader user should probably have my indicator package. And I'm not taking enough advantage of that, you know? You know, in order to make a living off of that, I would have to have like 50. I think that it would need like 50 purchases a month. So I probably would need to make the indicator package more expensive to be able to make a living off of it. But let's just get the people coming in first, and then we'll increase the prices according to what we need for marketing and yada, 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 right? But I'm not pushing that very hard, and I'm not getting as many. I think one of the issues that I have is that my audience is not as much Ninja Trader as you would think it would be, right? Because my audience is primarily based on order flow and a couple of other things. Most of you guys end up doing Sierra charts. So the percentage of my audience that is actually like using NinjaTrader and could buy the indicators is probably less than it should be. So maybe that means that I need to spend more time making videos about NinjaTrader. Well, yep, I can think about that. I should think about that. Some videos to be more about NinjaTrader. To pull that audience in. So yeah. But I think that eventually we will get the content to the point where it's super engaging, right? You can get a big audience of traders who appreciate the advanced stuff who you teach to. Right now, there's not that many peeps yet. Just wait. Well, give it 7 years. I mean, that might be the case. I don't think of it in those terms, though. Like, the way that I view social media right now is that if you have an engaging message, the algorithms will send the people your way. It used to be the case that you just had to grind, and eventually you'll build your subscriber base up large enough that, you know, if you have a decent video, it'll get out there and people will see it, except, you know, that sort of a thing. And it's not like that anymore. Like, the engagement that you get is based purely on the video. So if the videos are not going viral every time, like Mr. Beast's videos are, it's completely a function of the quality of the content. So the quality of the content is good enough, like it's to build a good channel and to educate you guys, but it's not good enough to make a living off of it yet. We have to work on that, is how I view that. Now, part of it is talking about subjects that is going to appeal to a larger audience, right? So we do kind of have to talk about what's going on in the market right now. And we're learning to do that with TikTok content. So it's not like we're not going anywhere with it. It's just, it takes time. It takes time. Let's come look at this price action trading. Anyways, I was going to show you about price action video. Okay. So this might be hard for you to see on stream, but you know, here, this little gray area is like my previous videos. And you can see that there is always a little peak here at the beginning. There's always a little peak here, but that this one, it usually like really trails off here. And that's not what's happening with this video. That usually, you know, this video is continuing up at a pretty consistent trajectory. And if that continues, we're going to continue to see it do that. So if we continue to see it do that, it could be a video that was kind of like what the hardware video did. Started out with a few hundred views, and now it like gets like 200 views a day. Can you believe that? I come back here. That video still like wilds me out. Trading computer hardware, what matters? 100 views in the last 48 hours. And it just keeps doing that and keeps doing that. Wild, huh? Oh, did we break a new low? No, not quite yet. Seeing a move of that nature kind of makes me feel like I missed out, but I do think I did the right thing, considering I probably could have been listening there to Kashkari and saying I think I want to sell treasuries off of it. I'm still not 100% sure that's why it's moving though. Let's go to zero hedge here, because if it was, they probably have a thing about. Oh, inverse Kramer ETF has arrived. Credit Suisse considering outside investor. Initial jobless claims suddenly jumped last week.
Not the magnitude of bad news that is required to get the Fed off its hawks to the moon seat. So even 30 minutes later, an hour later, they don't have anything on it about it. So maybe it was Kashkari, maybe it wasn't. I'm not entirely sure. Doing perhaps a combine would attract viewers. So I made a video where I did a combine. It was actually, I thought it was a really interesting combine because it did really, really well. And then the time that we ran the combine just happened to be a really bad time to run a combine. But that video didn't really, people didn't really like it that much. Create another one and post clickbait titles, hope you and start drawing lines on a chart and see how it grows. We should start the stock market Steve channel. Like stock market Steve, I probably should have given it more time. I think that it's just that I personally got bored of it. I was just too ADHD and didn't enjoy trying to come up with more jokes for Steve every day. Yeah, that was the one with the robots. That's, yeah. That video wasn't that... I'm gonna have to do it differently. So one thing that I think would really help, would be nice, is to do a weekly synopsis, right? We were to come in and do a weekly synopsis and say, here were all of the major moves and what I was saying after all of the major... That could be really interesting. It would be a lot of work though, right? So if I had an editor, I could do that. And I think that would bring a lot of people. Because I was just watching like some of these videos with like Daniel Inskeep has done this. And Bayaheza has done this. Where they trade and they just go day by day about like what happened and explain it. And people watch that stuff. So... But I think that just doing solid videos about trading overall does a good job. Like this price action video, this is a good example of something that has a wide enough appeal and gets the clicks to do well. There's some other videos that I want to do that I know won't necessarily like attract a huge amount of people, but I think will be more useful to you people. So I do want to get those out of the way. Like the workspace and the macro correlations video. But then we, trying to talk about what's going on in the market right now. If I have a particular subject that I think is unique enough. One of the problems that I have is that we can sit down and we can say, well, here's what Kashkari said, right? And the market moved down on it. But the question is, will that still be relevant a month from now? Right? So when I'm going to make a video like that, I need something that has relevance for a very long period. But that would be kind of more videos like what Graham Stephan makes. Yeah. I'm watching this and kind of wondering if they're gonna push a little bit further. 'Cause that was a good attack at the lows. Enough of an attack that I'm really sitting here thinking how much more volume could there be to this. Like, look at where we are. We started at 7.5. We're almost to 8.5. So this was almost 10 basis point move. This is turned into an exceedingly big move. There's still a day from the 3rd, so that was like what, the beginning of this week? They haven't completely crossed over. And I do kind of wonder if there's not going to be like that they will back off somewhere down here. In other words, there's a couple of key levels below us that, like, if we're going to continue through those levels, then you have to be looking at like new yearly lows. And is that really justified by the current situation? Seems like a little out of the blue, you know what I mean? Especially if, you know, well, it depends on what employment does tomorrow, right? If employment is bad, then yeah, new lows of the year easy. Lows of the year easy. The yen is so volatile today. So like, the thing is that it can move on such little volume, right? But if you had been in anywhere above 10 here, if you had been short anywhere above 10, you probably had a pretty easy ride after that. You know, it actually probably would have made sense to have just hit into 09 when they were broke and we saw all that volume. And like, I wasn't sure that it was going to continue on, but clearly the order flow was there to do it. I wish I knew, like, when I come back here, hold on, that was 7:45. So that was 15 minutes after the market opened. Would have been about an hour ago. So if I go back to an hour ago, I don't see anything weird, and I just see comments from Kashkari. Large banks require significantly more capital. Inflation Reduction Act is not expected to reduce inflation in the next year or two. Remember the CPAL. Well, I'm definitely not going to pull out my live account tomorrow, right? Well, not after, in the immediate aftermath, at least. I think that's one where, like, I'm going to have to wait 15-30 minutes to let it chill out before I'll be able to muster up the courage to try and trade it. And I'm going to bet that the micro yields will have just completely pulled. Kashkari, I anticipate cracks in U.S. financial markets, but the bar for a change in Fed policy response is very high. See, one could read that information and make the inference that you're going to see a lot of selling over here in the treasuries, but I personally didn't see that one. So part of that may have been, if I was not trying to teach as much and I was really focused on the headlines that was coming through there and everything, maybe I would have taken a trade. But I think it still would have been a little bit of luck that it pushed so hard. So it really was quite an extreme move. Well, the length of which it moved is very much a function of the light liquidity. That's for sure. That's for sure. Hey, see you later, Chris. It's always just a little bit early. Chris, that has to leave. He must have to drive somewhere or something. Let's see here. Is Sabella Lee ahead of earnings? This may be helpful. Nomura constructed 2 long short portfolios based on company executive remarks and analyst questions during earning calls. The latter outperformed. Why? Perhaps on simple fact that they're less biased. So analyst sentiment portfolio outperformed the management sentiment portfolio. That's interesting. Wish you success. Thank you. It'll take time. It doesn't have to happen either. Like, that's the thing, is I'm not going to be like, if I'm on my deathbed, I'm not going to be disappointed. Like, the only problem, you know, my life was a waste because I never went viral on YouTube. No, pretty happy with what I do right now. But I would be able to help you guys more if I, you know, if I was doing YouTube full time, because it's always, I want to do this, I want to do this, I want to do this, and I have the energy for it. So that's why. Really? CNN Politics. Dozens of CIA officers accuse the agency of soft-pedaling its Havana Syndrome investigation, exposing a growing frustration among victims. I bet. So, if you guys aren't on the Havana Syndrome thing, so now I'm going to go off of like far left field where maybe we shouldn't go. But Havana Syndrome was some people that were working in Havana, I think it was. They would get sick, like really, really sick, and have to quit their job, and it had long-term impacts long after that too. And everybody's like, what is it that's causing this to happen? Are the Russians using some sort of long-range microwave device against our people, etc., etc.? We were talking about getting hats and stuff, you know, tinfoil hats to protect ourselves and stuff. And then I don't remember when it was, maybe a year ago or so. It's been a long time. They were starting to say that like it was all in their head, that it was like a hysteria, which I'm kind of like, And now they're saying that the CIA is dragging their feet on it. That's a little concerning to me. That just kind of sticks out to me. Yeah, if you want to blame the Fed for the coming recession, just know that you are blaming the firemen who put out the fire in your grocery store for the fact that water damage kept your store from opening. Now, as for the firemen who also helped to start the fire, that's something else. Yeah, no, it is right. I really like that that allegory. I really like that allegory. Trying to blame the Fed for a recession because of raising interest rates is like trying to blame the firemen for putting out a fire. Doing water damage while putting out a fire. They did kind of start the fire though. Like they did let the economy go too hot for too long. It wasn't like they set the fire per se. It was like it's really cold and we need some heat, and okay, so we need to build a bigger fire. And so you built a bigger fire and to warm the house up, and then the house was warmed up and they said, oh, this is great, let's just let the fire keep going. So they let the fire go for too long, things started getting set on fire, and then the Federal Reserve came in and put the fire out with water. That's what happened. The best allegory is the Saturday Night Live sketch where they shoot somebody on the couch and say, "See, he did it to him." Yeah. That's always a funny meme. I'm gonna respond to him because I liked that comment. Oh, that comment was Bob Iacino. He does that podcast with Jim Miorio. I'm starting to learn that both of these guys are pretty conservative, economically speaking. They would share very similar views to myself, so I kind of enjoy commenting with them. But because the what is it, the Chat with Traders or whatever podcast is gone now, they're kind of like the best trader podcast now out there. They kind of came in at just the right time. It's a little suspicious, isn't it? No, it's just Bob Iacino tweeting. Sorry. Yeah, it's just a tweet. See, like here's Jim 2 hours ago. Let's just start capping the prices of stuff. That should do the trick, right? Can I give one final rant and then I'm done for the day? Okay, because I saw this. There's been this argument going on with. Oh, I wish I could remember his name. Now I can't remember his name. So there's a guy on TikTok that is like the most prominent libertarian. So I think that he has a lot of economic ideas that are kind of dumb. I've never seen him like directly advocate for it, but he seems like the type that's like, let's go back on the gold standard, get rid of the Federal Reserve, that sort of a thing. Okay. So this is a thing that always drives me crazy, is that people on the right, the real ideologues on the right have ideas about economics that are just so toxic. They're just some of the dumbest ideas about finance. Like, they'll get a lot of major things right, but then it's like, okay, you get all that right, but then you get rid of the Federal Reserve. Way to go. Like, you're just going to completely screw everything up if we gave you everything that you wanted. But they're very, very good at pushing back against the dumb things that liberals say. And so the argument that they were having was that this liberal said, well, the problem is that liberal ideas are harder to understand and conservative ideas are really popular, and that's why we have a problem. And I'm like, I watched that. You have to know that everybody on the right is gonna like go ballistic at something like that, right? Because everybody on the right is thinking, yeah, I'm getting what is the word? I'm not getting as many views as I should because I'm a conservative, right? That's what they feel. And they also feel that a lot of liberal ideas are oversimplifications and a failure to really truly understand subjects. Maybe that's true. So they were going through they were having this back and forth about studies. He was like, here's this study that shows that people that are economically conservative tend to be smarter, have higher intelligence or whatever. Let me tell you what. It's a dumb argument. It's basically just as dumb as trying to argue about whether certain races have a higher IQ or not. The variance within the groups is higher than the variance between the groups, and the entire metric and statistical basis of the metric that you're using to make the comparisons is suspect to begin with. Remember that Nassim Taleb believes that IQ is just complete bunk altogether. That it's not a useful metric at all, is what he thinks. So the whole argument is dumb. Here's what really matters. Let me tell you, here's what really matters. Okay, when we have an economic problem, what do we do about it? When you have an individual policy, is that a good policy or a bad policy? And you cannot look me in the face and tell me that the economic policy that we have had the past 2 years was an effective one. You cannot tell me that. Nobody will believe you. Nobody believes that. We all know that the past 2 years have been a complete and abject disaster. Right? And where did they come from? The far left. I'm just saying, the proof is in the pudding. Right? And here's the thing. Economists tend to be left-leaning. Most of the people working at the large financial institutions that are doing trade, the people that are like economists at the Fed, all of the people in these really important institutions, they're liberals. But by and large, they're not like woke far left progressives, okay? But by and large, they're liberals and they're Democrats, right? Why is it that the people, like, they should know better? These people, they should know that just putting price caps on everything is like a really bad idea. They should know that trying to manipulate the oil market in the manner that Joe Biden is doing is a bad idea in the long run. They know better. And what is the problem? Is it that they don't actually understand they've got it wrong? I don't think that's true, because when I talk to people, when I look around and I see the people that really know what's going on in the market, I don't see any of them saying, oh, this is a great idea. So only the politicians and the clueless rubes that are saying, you know, that just follow the politics and say whatever the politics want them to say, that are saying that. Everybody that I've seen that has any amount of professional economic experience is saying these ideas are dumb, right? So what is really causing this? So you're not speaking out. These people, they're seeing the Democrat Party do this stuff, and they're like, well, I don't want to rock the boat. This is like Janet Yellen, right? She said these were bad ideas, but she wasn't going to say it publicly. She wasn't going to resign, because that would make people question the unity of the administration and hurt the administration politically, and that would do more harm in the end. And I lay it right at those feet. All you liberals, seriously, not joking. We can be buddies, but you got to speak up. You got to be all this woke nonsense that's going on. Like, let them be woke, okay? If people want to be all offended about certain social issues, and let them play that game, and they'll figure it out. I hope they'll figure it out, okay? But when it comes to economics, we cannot play that game. When you know that they're doing something that's objectively negative, and it's going to have an objectively negative impact on the economy, and 300 million people, you are obligated to speak up, and you didn't. And this is all your fault. It's all your fault. Straight up. It's all y'all's fault. Because the politician, Joe Biden, he's going to be Joe Biden. They always do this stuff. They always make those kinds of dumb decisions. And like even Obama, he tried to do those dumb decisions at the beginning of his term, right? And what happened? The economic people came in and said, well, okay, but Mr. Obama, like, here's how the market actually works, and here's what we should probably be doing. And then he, you know, the Obama administration was kind of like, oh, let's just leave it alone. And it worked. Right? But then what happened? All of this woke stuff came along. You're afraid to speak out against your own party, and you just let your party do dumb things. You can't let that happen. You got to stop that. It's a good economic policy if it gives more money to the poor. What are you, a poor hater conservative? I want to increase economic activity for everyone, and we're going to do policies that increase prosperity and economic opportunity for everyone. For everyone. That doesn't necessarily mean take more money from the rich. Progressive tax policy has been shown to be more effective. It has. In fact, having a really, really high marginal tax rate might not necessarily be a complete and utter disaster like we often think it to be. But it's probably not the key problem. I see some people think that, everything would be fine if we just increased taxes. No, because the problem is all of this other stupid stuff you're doing that prevent people from being able to start businesses and be effective. It's all relative least bad from a bag of bads. Right. Well, and like, here's the thing, liberals. You're still listening. After all of that, if you're still listening to me, because I don't hate you. Because to be honest, the people on my side, I'm a little scared about what happens if they have complete economic control. Okay. Because they have some ideas. I mean, like, what would get passed through Congress if Republicans took over both the House and Senate and the presidency? Okay, probably right now not too bad. Okay, but if they got through like everything that the base of the party wants, it would be very, very bad for the United States economically. Okay, they abolish the Federal Reserve, go back to the gold standard, all of this. It would be awful, right? So we need the left. We need the left to come in here and keep some sense of sanity, right? But the problem is that you're not even keeping your own side in line. So if you just let the far lefties just do whatever they want, even when you know that it's a dumb idea, you don't say anything about it, then our system's not going to work. And you get what you have right now. In the Trump era, nobody in the Republican was able to speak up as well. I feel like everybody got silenced. Oh, I don't know about that. I feel like that anybody that wanted to say something against what Donald Trump was doing got a great podium to speak from. Okay, look, guys, I got to get going. So good talk. I don't know what to put in today's title. Rates skyrocket back. Skyrocket higher again. Something like that. Free non-farms. Everyone was speaking during the Trump era. The Trump was just funnier than all. Well, I think that there is a really big issue in our society right now about who do you listen to. Because before it was like, because everything was centralized with the television stations, there was like a really clear way to have like a real discussion. And now we don't really have that anymore. And I think that it would be beneficial to have some structure around the way that we deal with conversations on the internet to help with that problem. But the first thing is you've got to stop trying to make people afraid to speak up, right? Especially on economic ideas. See you tomorrow. Non-farms are going to be big. In the meantime,